Good afternoon, financial professionals. Abby Fletcher here of E4 Insurance Services, welcoming you to the BREW, Building Relationships Every Week. Thanks for tuning in today. For those of you joining the BREW for the first time, we like to start the BREWcast by celebrating today's National Day for January 5th. Today is National Bird Day. We are encouraged to shine a spotlight on issues critical to the protection and survival of birds, both captive and wild. Fun fact, there are over 10,000 species of birds, and the study of birds is called ornithology. Today, fill your bird feeders and admire our feathered friends. Visit your local aviary or donate to your local bird sanctuary. Today on the BREW, we have the founders of E4 Insurance Services, Dan Peterson, who serves as our president, and Brendon DeRouin, who serves as our chief distribution officer. Today, they will be sharing their goals for E4 in 2022 and provide insight in the current insurance landscape. Both Dan and Brendon serve roles with NAIFA regionally, while also holding multiple leadership panels within the industry. We like to check in on them quarterly to get their thoughts on this exciting world of financial services. Take a look at the chat box down below. I'll be keeping a lookout for your questions and comments while Dan and Brendon are live. Also, all attendees are in a drawing for a prize, and we'll be announcing the winner shortly. Thank you for tuning in. And without further ado, I'm handing the mic over to our president, Dan Peterson.
Well, thanks, Abby. I don't know if donating to a bird sanctuary, if my Pheasants Forever and Ducks Unlimited contributions count towards that, but I appreciate that it's Bird Day. We at E4 want to first of all thank everyone for joining and those who will be watching this via our YouTube channel in the future. We've just wrapped up 2021, and everybody knows what a year it was. We thought after we got through 2020 and vaccinations would be available that we would get through this pandemic, and there's been more twists and turns, but thankfully we're here to share some really good news that in the insurance and financial services space that we support, it's been a really strong year. Brendon, anything to add to that?
Not specifically, although my favorite Charlie Parker song is Ornithology, so I guess I'll listen to that later today.
Well, we've had a very active year for our team, which is now 30 associates here at E4 Insurance Services, supporting almost 400 financial advisors who wrote business with us last year. And our application count increased, and we'll give a little state of the state here, 14.7% year over 2021 over 2020. In addition, our target life premium, and that's just purely the target, we don't factor any excess premium into that, was up 13.37%. Our linked benefit business was up 23.78%. So a really strong increase there. And then on our annuity front, that led all of our lines being up 24.63. A couple of things that we'll go over that, and we'll do some deeper analysis. But Brendon, overall, from a distribution standpoint, a very strong year.
Yeah, I couldn't agree more. And in an industry that is more or less flat, it's nice to find some growth.
We'll move on here. Analysis on our life business. So in the markets that we're serving, a couple of things that we're seeing, some trends. We added Mass Mutual this year, so we do see more whole life premium there, although it's still a smaller part of our overall. The largest source of business is our indexed universal life. That remains the largest count there at 44%, our 20-year term at 11%, 10-year term at 9.4%, GUL, which used to have the lion's share, Brendon, I believe, of our sales results, if I even went back 6-7 years ago, at 6.5. A growing line for us is variable universal life and the features that are along that side. Anything to comment on there?
No, although Zoom was unstable for me, so I think I cut in and out, and I got a new pop-up. Zoom quit unexpectedly. So I didn't hear everything, but I guess the one
I'm still hearing you.
Well, good. I didn't hear you for a while.
Okay.
If you're not doing IUL, I think you may be missing some of the boat that the industry is doing. It's and regardless if it has a guarantee on it or not, if it is an IUL base, we consider it IUL. And I know not everybody out here can do that, but it is a good product, priced well from a reserving standpoint for the carriers. And if it's something you haven't looked into, I would suggest that you do.
And just going through our top 10 life products, anything stand out here, Brendon, for you?
Well, first two are protectors. So like I said, if it has a guarantee, we still consider it IUL if it's IUL based. So, a lot of people think, oh, IUL, I don't want something with all that risk. A lot of them have guarantees built in. A couple of those products have return of premium features, built in. So, you've got an exit strategy besides death or besides, cash value growth. If you can get all your premium back and have had coverage, it gets rid of a lot of those objections. I would also say that it's a very diversified group of carriers.
Yes, it is. And you'll notice our top selling 20-year term is not really the lowest priced term insurance product in the marketplace. It's the North American Advantage 20 that has other benefits, the chronic, the critical illness benefits that you get with that product, that it seems to be working with a number of our financial advisors who like those features that are built into term, not just price.
And industry-leading conversion. So you can convert to any of their products, where not all of our carriers have such liberal conversion standards.
Correct. So you'll see our top life products in reverse order. Our top carriers for the year, top three: North American, Prudential, and Symetra were number 1, 2, and 3 in 2021. A little bit of the analysis here in our life insurance. The average premium, target premium that was sold was $35.69. If you look, the average IUL was over $10,000. The average whole life, $5,300, and the average VUL over $12,000. So we get into estate planning and also accumulation with the variable. And our largest ticket was a $290,000 target case. It was actually a conversion that converted to the AIG Value Protector Index Universal Life. Anything there, Brendon, stands out?
Well, not only was it a conversion, but it was a conversion with a life settlement. So it was a business-owned policy where the executive retired. They didn't need key man coverage and stock redemption on that business owner. So instead of letting that value go to waste, they ended up selling it in the market. So not only did the company make money, but the advisor did as well on that conversion. The other thing that stands out, so median premium, that's the midpoint of all of our policies. So half of our policies are under $1,000. Historically, I would take a look at that and almost get sick to my stomach that we're doing a lot of work on small premium. But now with, drop tickets, accelerated underwriting, Symetra Swift Term, these, for not only for us, but also for the, advisor and the client, can be very quick and not a lot of effort, but still provide that meaningful coverage.
Right. Avoiding of exams, APSs, and other things with the accelerated underwriting has really made our ability to process that smaller premium much more palatable in 2021.
And again, I guess 32 different carriers. I mean, that's there's a reason why we don't just have one carrier, and clearly we've illustrated that we use pretty much all of them.
On our linked benefit product lines, the number one selling product line was ForCare, which is the annuity that provides long-term care benefit, and then Care Matters, the nationwide Care Matters, followed by Secure Care with some Securian, Asset Care, and then MoneyGuard rounding out that. So those are the products that you'll see in our tops with linked benefits. And again, we did over $8 million of linked benefit premium in 2021. The average case size there, Brendon, was 152,000 on the annuity, and on the linked benefit life ticket was 82,000.
Dan, do you want to go back to the previous screen? So some people may question what do we consider a linked benefit? And if you looked at this pie chart, maybe you'd say, well, it has to have the word care in there, except for MoneyGuard, which is your classic, which, partly I find interesting is, MoneyGuard is what everybody thinks when linked benefit, and they, for the most part, represent the smallest portion of meaningful business. But I find that ForCare solution on the annuity chassis to be wonderful. It is very quick turnaround. You've got the questions up front, and when you can get triple your leverage, especially on a non-qualified annuity that has taxable gain, and get that benefit out to the client, in most cases tax-free if they use it for care. It's a great story. It's quick, it's easy. If you're not familiar with it, please talk to your RVP or somebody at E4, and we'll happily share the story.
And this doesn't reflect the life insurance with long-term care riders or chronic illness riders. These are products that are sold typically on a limited pay basis, although there are longer pay basis scenarios now, but where the long-term care benefit grows through an inflation protection feature is typically what we're looking at. Versus a life insurance.
Yeah. Most importantly, you cannot remove, for it to be a linked benefit, it has to have both a life or annuity component and a long-term care component, where, a lot of the life that we add living benefit riders, that's a choice, and you can't use it without it. So I know I went into the joke of it has to have the word care, but also can't get rid of that long-term care benefit.
Okay, breaking over to annuity, and anything standing out here this year, Brendon?
Well, predominance of FIA, which in a low interest rate environment, not all that surprising. And we don't break it down here, but there is a good mix between both indexed annuities with income benefits and those just with accumulation. And when you look at the products, we'll be able to see some of that. But with 24% growth, there's just a lot of everything.
Yeah, we did see quite a bit more MIGA business this year, which you do see as well, the 5 and 7 3-year products. So.
And I would say one thing that has definitely led to our growth in the annuity space is our AIR, so our annuity inspection report. So we will take a look at an in-force variable or fixed annuity, break down the details of that contract, and compare and contrast against other alternatives. And depending on what the client's motivation is now compared to when they bought it, it may make sense to exchange that annuity. So been very good.
Yes. So one of the things the carriers do share with us is that our average size annuity ticket is larger than the industry. When you look, and a lot of that is really due to our links sales, working with Nucleus on their lifetime income non-qualified solution. If you haven't made yourself familiar with that, you need to check out on one of our previous brews that was in early December that you can find on our YouTube channel. where Chris Pizzala, an actuary and senior VP of Nucleus, shares a little bit more about the link strategy, and it's something you may want to make yourself familiar with. But you'll see with and without links that they drive up average size cases because you are funding an executive benefit down the road. So we track it both ways. The other thing that I would share there is that our largest ticket for the year was a $2.7 million annuity on a joint and survivor payout basis, a guaranteed minimum withdrawal benefit on the nationwide Peak 10. And that was utilized to guarantee a gift, a one-time gift that would guarantee a $26 million second to die policy. So other ways that some advisors are using annuities to fulfill needs and challenges, it's always, we like to remember, it's not what the insurance or annuity is, it's what it does that is so important.
And I guess, Dan, you want to go back one second? The one thing that, I look at this screen and see median premium 100,000 in both scenarios and say, well, that just seems wrong to be a fabricated number. It's not, believe it or not. We get a lot of tickets, applications right at 100,000, partly because there are high band bonuses, with some carriers at 100. But when you look at the breakdown of the annuities, you get into that middle area, and they're all 100,000. So, just in case somebody's mind thinks like mine.
Scary thought.
Very.
Well, what is the word of the year, Brendon? What are we focusing on for 2022?
Well, we're looking at growth as our word. I am on the advisory council with North American and was at a meeting with them, and they believe that 2022 is actually going to be their best year ever and expected for the industry, given a lot of things going forward. But I like to look at the 4 R's in the word growth, which it's more like Tony the Tiger, growth. But yes, so review. As we talked about before with our AIR program, you can review existing in-force annuities. We have AIM, on the life side. We also have our Pension Max, where you can review your clients' pensions to see if maybe doing a single life with life insurance protection makes sense, or rolling out that lump sum and using an annuity. So make sure to review your client's insurance on all levels. Reposition. We do, as I mentioned before, just reposition some of those annuities or life insurance contracts into other life, but also, given where we are with the tax climate and future tax changes, it may make sense to reposition money from qualified to non. So take a look at repositioning. Retain. If you have business owners, one of their largest concerns today is retaining their top talent. So how do you help them do that? Often you can give a client a raise, and that that may work short term, or just make it easier for somebody else to have a dollar amount. But if you have a SERP plan, so a supplemental employee retirement program, or retention program, as I like to say, or a REBA, you can have a benefit tied to them sticking there to retirement. That's what we use with that links. It's a recruitment and retention tool that will have a meaningful income in retirement. So, and then of course retire, which ties into all of those. But if you're looking at repositioning dollars for retirement income, a TARA or a supplemental income using tax advantage life insurance and tax-free loans in retirement can really be good. So those are our 4 R's of growth. Dan, anything you'd like to expound on there?
No, I think we have slides coming up that will talk a little bit more about that, but and a little bit more of the how-to and how we're positioning E4. But we certainly, with growth, we certainly are experiencing our own set of supply chain issues, Brendon. And that is, as the carriers have gone remotely due to COVID policies, their time services have really struggled, and it's been, to say the least, a challenging year from time service and getting policies underwritten and issued. Anything to add there?
Yeah, as I tell my friends, if we have supply chain issues, in the life insurance business where it's effectively not a product that we're producing, it's not tangible. I can understand why the rest of commerce as a whole is having supply chain issues, and I think it's going to be a change in the industry overall, because they not only do these case managers and underwriters, if they move to home, they want to stay at home, and I get it, and some people can do that very well. The issue is the supervisors have not worked with managing people at home, and having those metrics and being able to make sure that people meet time standards. It's all a work in progress, and the reason why we bring that up is just so you can help manage expectations with your clients. As we all know, insurance isn't quick, and since COVID, it's not gotten any quicker. But we do have drop tickets and other things that have helped.
One of our bright spots for 2021 was Symetra's Swift Term, and we were a beta testing organization. We were on the development committee in helping develop that, and we were one of their top agencies in moving that product to market in 2021. And some really bright spots there. If you're not familiar with that, please make yourself familiar. We have upcoming brews on this, but in essence, a third of the cases are instantly issued and are available for the client. A third go through a light touch, which is an underwriter looking at it, and are typically approved in 24 hours. So 66, our numbers are actually close to 70% of the business is issued in 24 hours. It's an all online process, all electronic, and then the last can go to full underwriting. But if you're doing anything transactional, we're seeing policies issued in 16, 18, 19 minutes, and the client can pay for it and have the policy in their inbox and their email in a very, very fast process, and with no real human touch in many of the cases. So that's a way, and that also has conversion privileges, unlike some of the other online term insurance options that are out there.
And pricing is second to none. Your client is not paying more for this option. It is they are price competitive. Compensation is competitive, and when you look at the growth of a Lemonade or some of the other online instant direct to consumer portals, there's a desire out there for this quick solution, and now you can provide it.
And then we have other carriers coming onto our Vive platform, which is a good way to work with drop ticket accelerated underwriting carriers across a multi-carrier platform. Cincinnati Life will be joining that in June. One of the concerns in 2021 was the increase in the death rate. We actually had life expectancy numbers drop for the first time in many years. A lot of that due not just to COVID, but also the young people that are being taken because of opioid deaths and also suicide. So, Brendon, I know we've seen this statistic, and a number of our advisors commented on this, but 40% increase in deaths by a carrier ages 18 to 64 is obviously some significant concerns.
Yeah, I'm glad that one, I'm not an actuary, nor do I have to account for this, but if you got somebody on the fence about having insurance, I think sharing this is helpful. There's fear and greed as motivators, and this is definitely on that fear side. Now, I will tell you that 18 to 64 is a historically, low mortality rate. So it doesn't take a huge increase to have it, go up by 40%, but it's still, statistically very alarming, and more reason to make sure that people have the, proper and enough coverage out there.
And the carriers here, we're talking about some of the group claims that they're seeing in the group marketplace. So, which is, guaranteed issue, not necessarily fully underwritten insurance. So there are some things that are being looked at, but obviously a concern that we've seen, and it would remind you that your rates today are at a very, very competitive rate to lock in. So that would be something to keep in mind if we see this trend continue. And then, boy, we had Washington, the Washington Cares Fund, which instituted an additional payroll tax without a lot of benefit for many people. And so the ability to get out of it by purchasing private insurance really created a meltdown within our carriers and our industry. So we've gotten through that, but I would say that we're all looking at other states that are toying with the same type of concept as a way for them to offset the expense of Medicaid and the tremendous burden of expense for individuals who don't have any long-term care protection and go on to government assisted long-term care. Brendon, anything to add there?
Yeah, I would say so. What states are next? Just high level of how the process went in Washington. It became law, and then carriers started to get inundated. And I will tell you, it was not a well thought through law. There was not guidelines on what constitutes a policy or how long you have to retain the policy, and carriers started to get hammered with that, and they just pulled out of the market. So regardless if somebody wanted a policy or not, if it was to offset this tax or not, there were no options in Washington when it came to 4 months out from this being instituted. So it just tells you to be proactive. Don't wait till your state says something. If you've got a client that has a long-term care need, be proactive in planning, which is true for all lines of insurance. Don't wait till your house is on fire to get a homeowner's policy.
Well, speaking of long-term care, we're pleased to be rolling out this year with Shane Van Patten, Regional Vice President for E4. And Shane is served on the CLTC Board of Directors, and he has developed a course for CLTC for financial planners, and we'll be rolling this out. We have openings for advisors even this month. So if you're interested, reach out to your RVP or one of us here at E4. And it's a overview of the insurance solutions and really can help improve your knowledge with the CLTC Foundations course, increase the value of your practice and provide benefits there. You get a certificate of completion, and it's a minimal time investment to receive the benefit of going through this. But Shane will be one of the instructors, and we have others of our E4 team that will be also doing instruction. So it's something you won't want to miss. You'll be seeing some more information come out about this, but if you're interested, please let us know. When we go down through, Brendon mentioned many of the things that we have developed on a proprietary basis, and went through those awful fast, but these are all tools that we have available for advisors, and they've had a big impact in our ability to grow business and to meet the needs of clients that our advisors serve. So make sure you're aware of these, from our reviews to our different analysis tools. and our personalized quoting tools as well.
I would say our most used on that list is our long-term care analysis. So if you have not seen one of those, obviously you can log on our website and see a sample example, but a great and powerful tool to help present the opportunity of long-term care.
Now we talk at E4 all the time. What it was, people ask me, what does the 4 E's stand for? E4, and it's energy, energize, edge, and execution. So we hope that you've experienced this as you call in and you work with your dedicated design team. We measure this. We review quarterly with our team where they're at with their 4 E's, and we have a phenomenal team that continues to grow and develop. And we've made some additional investments in our team. We're up, as I said, we're at 30 associates now and on our team, and see that growth, and we're continuing to grow in a number of ways. So what have we done? And I would encourage anybody if you're running your business, be looking at how you can invest in your team, invest in your industry, because this is a really important part of that. But we've instituted in 2021 a series on effective communication strategies. We've created an emerging leader program for those that we're identifying as future leaders within our organization, creating a path to ownership within our organization for key people. And we do monthly leadership coaching, leadership meetings with an outside consultant to help our team continue to grow. We have facilitated strategic planning. We're finished up with our senior leadership team, the 5 dysfunctions of a team training. Patrick Lencioni, if you haven't read that book, what does a healthy team look like? What is a dysfunctional team? What are some of the things that separate the two? So we've gone through that training. And we have a sales mastery program that we enroll our advisors and team in to our VPs to help them improve their skills. So doing a lot to sharpen the saw. And then lastly, we're doing assessments as we hire, but investing in our industry. And we're very proud of the support that we're providing to NAIFA. We've become a sponsor in their Financial Security Guardians program. We are sponsoring 50 NAIFA memberships for our top advisors and staff. So that is something that is a great partnership with us, and it's all about giving back to our industry and also advocacy, which is a huge part, as we saw this fall with the 2021 tax proposals that had some tremendous challenges in them from what had been done previously from a planning perspective. So important things that our team is working on, and just wanted to share that with you, that we think it's extremely important to invest in, and that's going to be a big part of our growth plans, is continuing to grow our people and the knowledge that they bring to you and to your clients. We would be remiss if we didn't recognize our top advisors, and for 2021, so on the life side, for his 5th straight year, Chris Henderson, M3 Financial, given a close run by Zach Schnitzler and Roger Vandermoos, round out the top 3, and you can see the other top 10. We look forward to recognize that. Chris Pizzala, number 1 on Annuity, and then Linked Benefits, Michael Smith. Congratulations and thank you for that production. Zach Schnitzler showing up in all 3 categories and highly on both life and Linked Benefits, as well as some annuity production there, is our top all-around advisor. So congratulations to them. Anything to add there, Brendon?
No, but we wouldn't have the growth if it wasn't for the great advisors that we have on this list, and all the others that are either online now or watching later. Really do appreciate all of you making 2021 great, along with our staff. They wouldn't be anybody to process business if it wasn't for them. So thank you to all involved.
Very good. Well, Abby, that's it for our presentation and a little recap on 2021. It has been a great year, and we are so thankful for all of the support from our advisors. But is there any questions that we might be able to answer?
There sure is. And thank you guys for giving the time today to share past year and the year ahead. Question that bubbled up from the audience first is, what industry obstacles do you foresee that could derail E4's growth plans for 2022?
Industry obstacles. Well, certainly access to the markets. Insurance companies pulling back is always a concern. We continue to see the challenges with stock companies that activist shareholders coming in and not liking the rate of return or wanting. Insurance companies tend to retain a lot of capital for the future. And boy, if we could get that capital released out and improve shareholder value and maybe sell off certain parts of the business, that's always a concern for us that we're reviewing. Another Washington type scenario is a concern for sure. We still have.
Yeah, I was going to say sweeping legislation. If somehow commissions became outlawed. Not that we wouldn't ultimately find a way to get these products in the hands of consumers, but it would temporarily derail things for sure.
Mm-hmm. Good.
Yeah, those are the biggest. I mean, we do see the concern, but I think, overall, our carriers still on a selection basis are still feeling comfortable with most of the risk that we're writing. But that's a key part to what we're doing. But that's why we're diversifying, and we do it in a lot of different ways.
Thank you. Well said. And this is in the same area. And I asked this last year of you as well. What keeps you up at night?
What keeps me up is how am I going to beat Brendon in sales results? That keeps me up at night. What is my son doing as a freshman in college? That keeps me up at night. Brendon, what keeps you up at night?
I sleep soundly, honestly. When it's time to hit the bed, my mind turns off and I go to sleep. When it's when I work out that my mind sort of runs and because I'm literally running and not. I worry about what did we miss? What are opportunities that we have let go by that we could capitalize on? And there's only so much time in the day, but I feel that the products that we represent are really needed out there, and there are not enough people that are appropriately covered. And when you see the cases when somebody dies and that's not there, that's sad and heartbreaking, and that's what I worry about most.
I think big picture, Abby, I'm a student of John Maxwell as well, and one of the things that John talks about is the 21 irrefutable laws of leadership, and one of them is the law of the lid. And so I think all of us, as we look at our organizations, we look at our business, the things that we're doing day in and day out, are we creating the lid on our organization so that our people, because people will not go above or around the leader of their organization. So you have to continually raise your leadership ability or replace the leader with somebody who has a higher leadership capability. So, as we looked at our organization and where we want to go, that's part of the investment we have in our people, our coaching, and the other things, is to make sure that we're not missing those opportunities, that we're creating a culture and an organization that really can grow and thrive and develop and be successful.
Thank you. And the last question I have, it's in line with your John Maxwell recommendation, Dan. What one thing would you encourage a listening advisor to do to help them build their protection business for 2022?
Well, first of all, that's a wide range depending on where their business is, right?
Mhm.
That can be anything from what are you doing today to identify protection opportunities for your clients? So are you even having the conversation? So many times my concern is that we get so focused on rates of return and investment mixtures and all the other things that advisors have is in their shelf space of their mind, that it's limited to have that conversation about protection. Understand that by partnering with E4, we have tools that can not make it a big burden to add protection to your client's portfolio, but you've got to have that conversation. Actual advisors have to really make sure that they're making protection, whether that's long-term care, how we're going to protect the assets, how we're going to transfer the assets to that next generation, how we're going to preserve those, and make sure that the plan has escape routes in it. And that's what great advisors do, and they do it effectively. So that would be the biggest thing, is have more meaningful conversations with your clients and make sure they understand you're passionate about doing that. Brendon?
Yeah, I mean, I would echo all that, and dedicate time, make it a focus. It's easy to overlook insurance. Clients don't want to pay for something that only benefits others, and they don't want to think about their death or the death of this. It is an easy thing to overlook. So dedicate time and focus to that, and if, as we talked before, invest in your practice. If you need to add staff or an insurance specialist to help cover your clients, I can guarantee it'll pay for itself.
Good one. Good one. Thanks, guys. That was all the questions from the audience. Any final words from the founders before we go to the prize?
Let's make 2022 even better and a year of growth.
Yes.
Well, yeah, final word would be what a great year we just wrapped up from a production, and we're very bullish. We're entering 22 with a large inventory of insurance and underwriting. We're just starting to scratch the surface and growing our marketing capabilities, but we look forward to partnering with you. We've had some tremendous success working with many of the people on this call today, where they've identified an opportunity and then brought us in and be able to help them flesh that out and bring that that opportunity to a closed business that really made an impact in the client's life and in their business this past year. So we look forward to doing that a lot more and becoming, you'll see us, we're growing as one of the top organizations in the country, and it's because of the great people we have on the team and the advisors that we work with. So we look forward to making more of that.
Thank you. Thanks, guys. Now, Brendon, will you draw a number between 1 and 20?
You'd like me to actually draw it? Like a picture?
Yes,
or can I just
draw a number for the group, please. We need to see what a number 12 or 1 to 20 looks like.
Well, I guess I'm going to go with 12.
12 it is. Who's the winner? Who's the winner? Mike Kratzer. Congrats, sir. Be on the lookout for an email coming from all of us here at E4 with some complimentary CE as well as a coffee card. So thanks for dialing in. And be sure to tune in next week. As mentioned, we're going to have our friend from Symetra, Danielle Schneider, talking about Swift Term. Term coverage through Symetra, which is placed in less than an hour. You heard me correctly. This is one you don't want to miss. Thanks, friends. Happy 2022 and make it a great day.
Thank you, Abby.
Thanks, guys.
Thank you.
We staying on, Brendon?
Don't need to. We can drop off.
Okay, I'm calling you.